Hello and welcome. So you're thinking about starting your investment journey right here in India? Well, you've come to exactly the right place. Today, we're going to break down the absolute essentials, everything you need to get started on the right foot. Let's pull back the curtain and make this whole world of investing a lot less complicated, one step at a time.
All right, let's be honest. Does the whole idea of the share market kind of make your head spin? Do you ever get that feeling of samajh nahi aa raha, like you just don't know where to even begin? Look, if that's you, you are definitely not alone. It's a super common feeling, and today we're going to fix that. We're going to build the clarity you've been looking for.
And you know what? That feeling is totally valid. The securities market, it can feel incredibly complex and just overwhelming. But here's the thing. The most important tool you need to hit your financial goals, it's not some secret stock tip, it's clarity. Simple as that. And that is exactly what we're going to build right now.
Okay, so let's think about this whole thing as a journey, right? And before you start any journey, you've got to pack your bag with the right tools. So come on, let's pack your essential investment toolkit. We'll start with the three main things you're going to come across.
All right, first up in our toolkit, equities. You probably know them better as shares or stocks. It's pretty simple, really. When you buy a share, you're literally buying a tiny, tiny piece of a company. You become a part owner. Now, here's the deal, the big trade-off. The potential for growth can be huge, right? Because as the company grows, so does your investment. But, and it's a big but, it comes with market risk. Your investment can go up, but it can also go down depending on how the company and the market are doing.
Next, we have something called debt instruments, and the most common example is a bond. Now, this is basically the opposite of equities. Instead of being an owner, you become a lender. You're loaning your money to the government or a big company, and in return, they promise to pay you back with regular, fixed interest. The key word here? Stability. It's a much steadier, more predictable ride compared to the roller coaster of the stock market.
And the third tool in our kit, and this is a really popular one for beginners, is mutual funds and ETFs. Think of these as a ready-made basket of investments. Instead of you picking individual stocks or bonds, your money gets pooled with thousands of other people's money. Then, a professional fund manager does the hard work, investing that big pool of cash into lots of different assets. This is called diversification, and it's super important. It's the classic idea of not putting all your eggs in one basket. It's a fantastic way to get started and spread your risk.
So let's just quickly recap those two big ideas. Equities, or shares, are all about growth, but they come with more risk. Debt instruments, like bonds, are all about stability and getting up predictable income. And honestly, a really solid investment plan usually has a healthy mix of both.
Awesome. So now you've got your tools. But just having the tools isn't enough, is it? A toolkit is pretty useless if you don't have a map to tell you where you're going. So now we need to talk strategy. How do we use these tools to get you to your financial destination? Let's start drawing your personal investment map.
So every good map has a foundation, right? And your investment map is built on these 5 pillars. First, you've got to assess. This is all about you. What are your goals? When do you need the money? And how much risk are you actually okay with? Once you know that, you can move to construction. This is where you actually build your portfolio, picking the investments that match your personal profile. But it's not a one-and-done thing. You have to monitor it, keep an eye on things, and from time to time, you'll need to rebalance because some investments will grow faster than others, and you want to stay on track. And finally, there's tax planning, which is super important to make sure you keep more of your returns. These 5 things, together, that's your blueprint.
Okay, this next part is really, really important. You have to understand that this journey doesn't just end once you've made your first investment. Not at all. Drawing the map is just the start. The real challenge and where the real success comes from is staying on that path for the long haul.
And this quote just says it all, doesn't it? Investing is a marathon, not a 100-meter dash. I love that because it's so true. This isn't about getting rich quick or finding that one magic stock. It's about a steady, patient process of building wealth over years. Look, markets will change, your own life will change, and that means your strategy has to be able to adapt. It needs to be flexible enough to keep up with everything. So there you have it. We've talked about the what, the why, and the how. You've got the basic tools in your toolkit, and you have the blueprint for drawing your own financial map. The only question left is, well, it's the most exciting one. Where do you want to go first? What's that big financial goal you're aiming for? What's going to be your first destination?